and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is What's Hot, a show that focuses on the biggest buzz on the day straight. And the stock markets are in fact in a buzzing zone itself. 25,824 for the Nifty. We're up by about 130 points. The Sensex has jumped by about 600 points in the trade today. And that's as a toast to the US-India trade deal and the final contours that have been announced over the weekend that is getting reflected as a booster across the D Street. You are looking at across the sectors a buzzing action. Barring FMCG, all the sectors are up and about. You're looking at PSU banks up by 3%. Of course, there's another factor to it. State Bank of India results have come in and that's the top mover on the Nifty today. Brokerage houses after the earnings have raised the target prices on State Bank of India and that's something that we will be discussing. Almost a 6% jump there. We will also be looking at the bullion prices, the gold and silver prices and how they are yet again bouncing back after a week of extremely volatile swings that we have seen on gold and silver as well. We will also be focusing on a lot of earnings as well as understanding from experts what exactly should your key focus be in the current markets as well. So let's first welcome our guest on board. Sugandha Sachdeva is joining in on the program with us. Warm welcome to you, Sugandha. Good to have you with us on the program as always. Let's start off with your own core area, that's gold and silver first. How are you looking at the current prices? Yet again, we are seeing gold prices jump back above the $5,000 an ounce level as well. We've seen extreme wild swings. Last entire week, investors have been looking at and trying to understand what should their current approach be. We've seen the top. People were trying to find out whether a top has been made in both gold and silver or is there still room to purchase at the swings that they were being offered at. What's your current understanding of gold and silver prices right now?
Yeah, hi Sakshi, thanks for having me. After a parabolic move since August onwards in gold and silver prices, we have seen sharp swings that have come in prices of late. It's largely the central bank buying, the strong ETF inflows, the weakness in dollar index, and structural deficit that has been seen in silver. That has all led to this parabolic move that we have seen in gold and silver prices, especially silver prices, wherein prices at the beginning of January were trading around 2,35,000 mark, but then they soared to 4,20,000 mark in just a span of few days. So it was a gain of almost 70%. But then such excesses do not sustain, and we were seeing a lot of speculative frenzy that had come in prices. And a lot of FOMO traders were actually turbocharging that rally. But then came the excesses got corrected with the margin hikes by several exchanges. CME has hiked margins thrice. Shanghai Futures Exchange also hiked the margins, and domestic exchanges also hiked the margins. So that led to a lot of long liquidation. Apart from that, a lot of ETF investors and the physical buyers, they also booked in their profit after a phenomenal and a stellar rally that we had seen in prices. Yes, prices have seen a lot of sharp swings in the recent time, but then the structural story is still intact. One should not approach gold and silver for a shorter term time frame. Rather, they should look at the broader picture. The broader picture still is intact. As you see in gold prices, the strong central bank buying continues. In fact, since 2022 onwards, central banks have been buying gold in significant volumes, more than 1,000 tons of late. Yes, in 2025, the figure was slightly less, but then it still remains much higher as compared to the historical averages, which indicates that their interest in gold still is intact and they are replacing US dollar with gold in the reserves also. In fact, India also sold US treasuries to in fact add gold to its reserves, and many central banks are doing that. And in fact, the overarching trend, if I talk about in gold, it's still very positive because there is loss of confidence in the global monetary order. And fiat currencies are losing values. See, we can print fiat currencies, but we cannot print gold and silver. And that's the reason investors and central banks alike are trying to own some physical and tangible assets. And that is the reason we are seeing this hard asset trade carrying a lot of momentum this year, and which we have seen in 2025. Of course, the return expectations should be moderate in 2026 after a significant rally that we had seen in 2025. But yes, the trend still remains positive. And apart from that, if I talk about silver, there is a long story in silver. For last 5 years, silver market is in a structural deficit. If you see the cumulative deficit for last 5 years, that's almost 800 million ounces. And that's the annual production of silver. And that is the reason we are seeing short squeeze in market, in physical inventories at COMEX and Shanghai, they've also been trading. So all of this is making a cocktail which is very positive for the long term, even though we have seen a lot of corrections setting in prices. But then as I see prices, $70 per ounce remains a very strong floor area for silver as of now. As long as that holds on a closing basis, the trend is still very positive, even though we have some hurdles on the higher trajectory. $100 per ounce is likely to act as a big hurdle for prices. But yes, as of now, the near-term outlook remains very positive. Even if we slip below $70 per ounce, we might see silver slipping towards $56 per ounce from where the rally started November onwards. Prices have already given a strong breakout above the major hurdle of $50 per ounce last year, and this bull run is likely to sustain at least for next 3 to 4 years, because the theme in silver remains very strong, be it the demand from AI data centers or the semiconductors or the electric vehicles or the electronics that we see around us. So all of this indicates that silver is not likely to be substituted significantly. It is likely to stay. This theme is likely to play out for a long term. And once those who have bought at the higher levels, yes, they are in some panic. We are also getting a lot of calls whether one should buy and accumulate at current levels. So my advice is not to panic. This bull run is likely to sustain, even though we may see some more dips, but yes, the structural bull run still is intact, and one can rather buy in staggered manner, not just in one lump sum investment, but as a staggered investment, one can keep accumulating gold and silver on lower levels. Now, if I talk about the price outlook for gold, I see very strong floor for gold at $4,400 per ounce mark. And overall, the trend remains positive. And for the year ahead, we are even looking at levels of around $6,200 to $6,400 per ounce. Even though we have a minor hurdle in place at $5,100 per ounce, but with the way you have the uncertain policies of President Trump, he has recently also planned to impose a tariff of almost 25% on any country which is trading with Iran. And you also have geopolitical risk in the Middle East region. Even though the talks between US and Iran were slightly positive last week, but then the tensions are still ongoing. And in case the Iran continues with its nuclear enrichment program, these tensions could escalate further, and that could provide further boost to gold prices. So the overall outlook remains very positive on back of all the fundamental factors that we have discussed. And we are also expecting more decline in dollar index, which is also likely to favor the outlook for gold as well as for silver.
Right. I also wanted to ask you, with respect to the US-India trade deal that has just been announced, and over the weekend we have heard the contours as well. How do you see things progress for gold and silver going forward from here? We're also going to be watching out for how the US Fed really moves on the interest rates fronts now that the US government has appointed a new Fed chair as well. What do you think, and what is being anticipated as far as both gold and silver prices are concerned with respect to what's happening in the US?
See, earlier markets were, I'm answering your second part first. So with respect to market expectations for rate cuts this year, market was earlier expecting aggressive monetary easing because President Trump time and again has been pressurizing the Fed chair for cutting interest rates. In fact, there have been a lot of concerns about the Fed's independence also after an inquiry was initiated against the Fed chair, the current Fed chair. So there have been a lot of concerns, and that was one of the major reasons which provided a lot of boost to gold and silver prices. But yes, with the recent nomination of new Fed chair Kevin Warsh, these expectations were scaled down because the new nominee Kevin Warsh is considered to be an inflation hawk, and he gives more importance to controlling inflation over growth, and has not been in favor of cutting interest rates aggressively. So market expectations tilted significantly, and in fact market started pricing in a harder stance from the new Fed chair, a hawkish stance, and this expectations for 2 to 3 interest rate cut was scaled down. So that was one of the primary reasons which led to this recent meltdown that we had seen in gold and silver prices towards the end of January. So now there are again concerns with the recent comments coming in from Treasury Secretary that Fed's independence is still at threat, and an inquiry could be initiated against the new Fed chair as well in case he doesn't cut down interest rates. So that again raises concerns about Fed's independence, and that is one reason because of which the expectations of interest rate cuts have again got a boost, and we are now anticipating 2 to 3 interest rate cuts this year also. So this is likely to favor more upside in gold and silver prices and pressurized gold dollar index. So this de-dollarization phase is likely to continue. In fact, President Trump in his recent comments has also commented about the weakness in dollar index. So that was being perceived by the market participants that he wants dollar index to weaken further. So this de-dollarization and these de-globalization trend is likely to continue. BRIC countries have also planned a new currency unit which is backed by gold and BRIC currencies, the cumulative value of several BRIC currencies. So this is again a marked shift in the way bilateral transactions are done, and the dollar dominance is at threat as of now. So this all is likely to favor gold and silver prices going forward. Now, talking about your second part, the India-US trade deal, yes, it's a very positive development because of which we are seeing a lot of optimism in the domestic market as well. In fact, after the budget, we had seen a big crack in the market, but then this India-US trade deal has provided a lot of boost to the Indian markets. And from the gold and silver perspective, it is slightly negative because that is likely to lead to some inflows in the domestic market and favor a lot of sectors, and that could actually lead to some strengthening of the Indian rupee. We see Indian rupee finding a lot of support around the 92 mark. As long as 92 mark is not breached, we are looking at some appreciation in the Indian rupee, and this could actually lead to some pressure on gold and silver prices, especially gold prices, because in case these sentiments improve further, the safe haven demand for gold could witness some erosion, and that could lead to some pressure on gold prices. So we are not very bullish, at least if I talk about in the very near term, because this rally we have already seen in 2025 and in the first month of 2026. But yes, as the year progresses, we still see a lot of geopolitical risks panning out, the interest rate cuts, the strong ETF inflows, which are all likely to favor gold and silver prices. In fact, last year, if you see, because of the dismal returns in risk assets, cryptocurrency sell-off, the sell-off in the bond market, especially in Japan, many investors had moved parked their funds in gold and silver especially with the kind of FOMO trades that we had seen coming in silver. So this is still likely to continue, and with the way you see the difference in the divergence in the paper market and the physical market, that's a major factor which is likely to drive silver prices on the higher trajectory. March contract is likely to be very interesting because if you see the open interest in COMEX and the actual deliverable metal which is available, it's only 14%, which can cover the total open interest. So which is a very threatening scenario. If you work out on the maths, they cannot deliver the metal. In case the COMEX decide to deliver the metal in cash settle the contracts, that would give a very wrong message to the world, and that would mean that the fair price discovery cannot be assumed at COMEX, and you cannot expect a transparent system at COMEX. So that is a very dreadful situation which could pan out in March. So we have to see how they settle it, because there are a lot of open interest positions currently, and inventories at CME have been draining significantly. In fact, in the last 3 months, the inventories have drained by almost 37%. So with this pace, they have only 32 days of inventories left at their vaults.
Right. Sugandha, I also wanted to ask you from a broad markets perspective as well. Now that the biggest overhang of the US-India trade deal is now out, this was keeping the markets, directionless for the large part of 2025 and in the first month of 2026 as well. And we did see a lot of volatility there in the markets as well. Now that we have at least 2 or 3 of the major events done, we have the budget that's done, we have the RBI policy that's out, we've also now had the US-India trade deal that has also given us the contours, and this week itself we are anticipating that 18% tariff to hit in on most of the exporters right there. So looking at all of these clarities that are coming in, how would you look at the stock markets vis-a-vis the commodities at this point in time, and what do you think is a better way to really look at this point?
In terms of the equity markets, I think after a period of almost 1.5 years of painful period of correction and consolidation, we are coming out of that phase. So global threats are still there. There are still a lot of concerns, but yes, we have already seen this India-US trade deal. Budget is also behind us. Budget was slightly neutral for the market. Market was spooked by the rise in STT on futures and options segment. But yes, with this India-US trade deal and the RBI maintaining a neutral stance, all of these factors bode well for the Indian markets. I see very strong, in fact, on other forums also on the budget day, we had clearly mentioned that 24,500 remains a very strong support area for the benchmark index. As long as that holds, we are very positive on the market, and I still maintain that stance as long as 24,500, though we have left that level much behind us. But yes, as long as 24,500 holds, we are very positive on the Indian markets. And with the way we have seen in the first month of February, the inflows have turned very positive after a long sell-off that we have seen from the FIIs, almost 1.5 lakh crore of sell-off last year by FIIs. And in the January month also, we have seen almost 26,000 crore of outflows. It's just the first week of February that we have seen cumulative inflows of more than 2,000 crore. So this is indicating that FIIs are returning back to India, and the outlook remains positive with the fact that government has focused a lot on growth and inflation is benign as of now. RBI has done its part by 5 rate cuts last year. So all of this indicates that there is room for much higher growth trajectory from here on. Budget has also maintained a growth target of 6.8% to 7.2%. So overall, this India-US trade deal is a very big game changer for India. And in fact, we are likely to see significant inflows coming back to the markets. And as long as this level of 24,500 holds, we are positive. Yes, we do have some resistance in place at the record highs of around 26,300 levels. Once that's surpassed, we are looking at levels of 27,200 for the benchmark index. In terms of the sectors, I feel defense is likely to assume a lot of traction, railways, with the way capex allocation have been, the government in the budget has increased its capex allocation for infra, for railways. I see railways sector also to perform well. And in fact, I'm very positive about the IT sector also. Last week, we had seen a significant sell-off that had come in the IT sector, all because of the global sell-off in tech stocks. But yes, I'm positive about the IT sector, all because of this India-US trade deal. IT services sector is likely to gain a lot of traction. And in terms of the stock-specific action, we have maintained on several forums. We are very positive on the large cap IT stocks, especially Infosys and TCS as well.
Right. Let's also focus on some of the other key aspects there on the markets as well, viewers. As far as the US-India trade deal is concerned, it is important for all of you to get to know what exactly has truly happened and how things will change for the overall scenario as well. We will also come to you, to understand how should one be approaching, the opportunities within the markets which are pertaining to gold and silver also, Sugandha. Say, for instance, the gems and jewelry stocks, the gold financiers. We're also looking at a lot of stocks that have been tracking the commodity move all through 2025. But that's just in a bit. I just wanted to highlight for all our viewers to know what exactly has happened over the weekend as far as the US-India trade deal has happened. You will see a lot of graphics come up on your screen so that you register what exactly has taken place. So we have seen that our Commerce Minister Piyush Goyal on February 7 making a significant reset as far as the India-US economic relation is concerned. He's described this deal as a landmark step towards Viksit Bharat 2047. The agreement, remember, is an interim trade framework that is aimed at boosting bilateral trade to $500 billion. Now, remember, this deal follows a period of friction and, of course, centers on the reciprocal tariff as well. And some of the contours are that the headline of the deal is definitely the reduction of the US tariffs on Indian goods from as high as 50% that we were imposed in last August, now down to 18%. There's also a removal of oil surcharge. The US has eliminated additional 25% tariff previously linked to India's purchase of Russian oil. Remember, Piyush Goyal has also highlighted and emphasized that this 18% rate now gives India clear advantage over competitors like China, which faces 35% tariff, and other nations which are our neighboring nations like Bangladesh, Vietnam, Indonesia, facing 19% or plus kind of rates as well. There's also several high-value Indian export categories that will enter the US in the zero tariff category as well. So general pharmaceuticals, which is $13 billion worth, smartphones, aircraft parts as well. We've also seen some luxury and artisanal products like gems, diamonds, artisanal handicrafts. We've also seen some agriculture like spices, tea, coffee, coconut oil, cashew nuts, and fresh fruits like mangoes and bananas will also be benefiting the US, team there. We will also be looking at some of the concessions and the red lines that have been pointed out. India has opened its market to specific US products while strictly guarding sensitive sectors as well. What we have given to understand is that tariffs will now be reduced or eliminated on US industrial goods, tree nuts, fresh and processed fruits, soybean oil, wine, spirits and animal feed as well. The red lines have been clearly identified. Dairy, meat, poultry and genetically modified foods remain protected with no duty concessions to shield the Indian farmers. There's also a non-tariff barrier. India has agreed to address the hurdles in medical devices and ICT, that's the information and communication technology goods, to streamline the import licensing as well. As part of the broad framework, India has signaled that their intent to purchase $500 billion worth of goods over the next 5 years will be focused on energy imports, coking coal, liquefied natural gas, technology like semiconductors, GPUs and even data center equipment, aviation like civil aviation parts, energy shift like the deal also commits for India to pivot away from Russian oil in favor of the US energy products as well. Sugandha, let me ask you your broad understanding. What exactly do you make of the contours that have been announced? There were initially some, some confusion about what exactly this $500 billion, worth of purchase would it mean. Now it's clarified that this will be done over a period of 5 years. How, easy and feasible would that be? 18% making us a competitive edge to other, export-oriented countries like Bangladesh, Vietnam. How would you look at that aspect? And of course, the red lines kept intact for some of the sectors. How would you look at these clarities that have come in?
So India hasn't opened all of its US agri products to be imported to India. So that's one part of the deal, because they want to protect their agri sector. So that's one part of the deal. Besides slashing down tariffs from 25% to 18%, the additional 25% tariff for importing Russian oil has also been scrapped. So that's also another part of the positive part of the deal. So now India would be importing a lot of energy products from US and also a lot of US industrial goods and some of the US food and agricultural products as part of the deal. And yes, it would open up its textile, pharma sector. So that will get a lot of boost. The leather products, the textile sector. So all of these sectors which had been heavily exporting to US, they will also get a boost because the tariff slab had risen to 50%. So now it comes to 18%. So these sectors are likely to benefit a lot from this trade deal. And yes, as you rightly pointed out, India is in a sweet spot right now with the growth trajectory that we are maintaining and with the way tariffs are much lower as compared to other countries in this region. So that is also likely to attract a lot of FI inflows. So Sakshi, if I just give you a recap, in 2024, China had come out with a lot of easing measures in October 2024. At that time, investors found a lot of value investing in China. Now they are likely to come back to India, and that is likely to play out very well for the Indian markets. A lot of sectors have been beaten down badly in the last 1.5 years, especially the small and mid-cap stocks. They are now likely to find a lot of value buying opportunities. We see a lot of opportunities in the textile sector also, and especially as I mentioned, defense, IT. These sectors are likely to gain a lot of traction. And also with the India-EU trade deal also, these sectors are likely to benefit because they are expanding their markets. They're not just solely dependent on US now. They are working on several agreements with other countries also. This free trade agreement with EU also, this is also likely to bode very well for the Indian markets. And once the rupee also stabilizes, we have seen our forex reserves also growing. So all of these factors in tandem point towards a higher trajectory for the Indian market. And as I mentioned, once we surpass this hurdle zone of 26,300, 350 zone, we are likely to see new record highs as well. And we are looking at the benchmark index edging higher towards 27,400. But yes, my biggest bet would be on the IT sector, because after a correction of almost 11% last year, this sector is likely to gain a lot of traction.
Okay, thank you so much then, Sugandha, for being with us on the program and detailing for us all these insights. Always a pleasure to have you with us on the program. Thank you so much for being with us. Viewers, let's also keep an attention on some of the stocks that you should be focused on. State Bank of India is definitely in the buzz. It's the top mover today because this is after the Q3 results have come in. Remember, the net profit has jumped by 24.5%, coming in at over 21,000 crores. The net interest income is up by 9%. We are also seeing that NIMs are steady. Gross NPA has slightly reduced sequentially. Net NPA has come down sequentially too. We have also seen slippage ratio stands at 0.40% as well. And after the earnings, we have seen that the brokerage houses are raising the targets for State Bank of India all the way up to over 1,200 rupees as well. That still points to an upside after the 6% surge that we have seen on this too. So that's one stock that you need to focus on. The other stock is definitely PFC and REC. Remember here, there is the merger details that are surfacing. The share swap merger will be cutting Centre's stake in PFC to 42%. The merged entity will continue to remain a government company. The final merger structure and the terms are still awaited, but remember this was already indicated in the budget speech that PFC REC restructuring will happen. At the current price, Centre's stake falls below 51% threshold. This is what MK Global has pointed out. We've also seen that the loan book snapshot indicates PFC's standalone book continues to stand at 5.69 lakh crores. REC standalone loan book stands at 5.81 lakh crores. Also, we've seen the PFC consolidated loan book at 11.5 lakh crores. That's up by 7.5% on a year-on-year basis in Q3. So that's one space that you need to continue to watch out for, both PFC and REC stocks, continuing to stay slightly muted in trade. Of course, awaiting a lot of decisions there. You're also looking at the IPO space, viewers. As we kickstart another week, this will also focus in on some of the new companies that are going to be listed soon. The IPOs that have opened today, there are two. Look at Fractal Analytics IPO. Today is when this IPO has opened. The price band is 857 rupees to 900 rupees per share. There's also an employee discount of 85 rupees per share. The lot size is 16 shares and there is a fresh capital as well as OFS that is going to be seen. The total issue size is 2,834 crores with 1,023 crore rupees as a fresh capital and OFS of 1,800 crore rupees odd. The other IPO that's opening today is iFinance IPO. Here again, the IPOs open today will continue to remain open till 11th February. The price band is 122 rupees to 129 rupees per share. Again, lot size is about 116 shares. Sale type is again fresh capital as well as OFS is going to be seen here. So that's something that we are looking at this point in time as far as this IPO is also concerned. So keep an eye. We will continue to get you more updates on this IPO, what are brokerage houses saying throughout the course of the session today. We will try and also analyze these IPOs in depth in the 12 o'clock show where we also discuss daily calls, queries as well. So stay on for that and we will definitely be discussing some of these buzzing factors at the 12 p.m. show on daily calls as well, where you can ask all your questions to all our guests who will be joining in. Stay tuned for that. Many thanks for joining in on What's Hot.